Well, I think when Nasdaq is down and people perceive it's down, and it's on its way down already, as I see it, but I think a lot of people haven't noticed that yet. I think they're going to turn around, and look for something else to buy, and silver could well be the place they turn. They're going to, people have been buying these volatile stocks will look for something else which is volatile, and silver we all know is more volatile than gold. So I think there's a pretty good chance that might be the thing they dive into. But I think the supply and demand looks after itself in the long run. In the short run, we might have this real rush of people, and that would make a very big difference because the silver market and the gold market compared with the stock market are both absolutely tiny. So it would only take a tiny amount of money changing place from stock market to precious metals to move those prices a long way.
Silver demand surged in 2024, while mine production declined, further deepening the supply deficit, according to Senior Analyst Clive Thompson. The increasing demand was primarily driven by the electronics sector, which saw a remarkable 20% jump, alongside a 68% rise in photovoltaic applications. Despite economic uncertainty, demand for silver will remain strong in 2025, continuing to outpace supply. China remains the global leader in solar installations and a key driver of silver consumption. 2024, the country consumed 232 million ounces of silver for solar applications. However, a slowdown in China's solar expansion does not necessarily translate into a decline in silver demand. Technological advancements in solar cell manufacturing ensure continued silver usage, even as total installations taper off. Over the past 5 years, silver demand has consistently exceeded supply, leading to a persistent deficit. In 2024 alone, the shortfall reached 182 million ounces, with an estimated additional deficit of 149 million ounces expected in 2025. This supply strain is projected to persist for the foreseeable future. While bullion banks can create unlimited amounts of paper silver to manipulate prices, they cannot manufacture physical silver, which remains critical for industrial applications and growing investment demand. Meanwhile, broader financial markets have experienced heightened volatility. On Monday, the tech-heavy Nasdaq dropped over 3% to a near 6-month low, as concerns over U.S. President Donald Trump's tariff policies raised fears of an economic slowdown. Rising trade tensions and signs of weakening U.S. economic growth have weighed on consumer confidence and business activity, adding to market uncertainty. According to Thompson, the weakening Nasdaq could drive investors towards silver. Given the metal's relatively small market size and inherent volatility, even a slight increase in investor interest could trigger a sharp price surge. With a sustained supply deficit and increasing industrial demand, silver may emerge as a strong asset amid economic instability. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
We quite possibly are already in a recession, even though it's not an official recession yet. In 2024, the consumption of silver did rise. It wasn't very much, but it was about 2% overall rise in consumption of silver. But that was coming from a starting point where the consumption of silver was already significantly ahead of the mine production. So in 2024, according to the statistics from the Silver Institute, the mine production of silver did fall and the consumed production did rise. And that was despite massive dishoarding by private investors who were basically selling their silver, melting it down and so forth. They haven't brought out a prediction for 2025 yet, but everybody thinks that the mine production will fall again this year. But the one thing which is rising strongly, and I don't think this will be affected by a recession, is electronics consumption. So the amount of electronics going is in the world is increasing rapidly year after year. And last year, in 2024, the consumption of silver in electronics rose by 20%. And a subcomponent of that was photovoltaic, where it was about 68%. So even if we go into recession, I think the consumption of electronic goods will continue to rise, and there's no known reason that anyone knows why the silver consumption or the mine production should rise. So no, I think a recession won't cause the silver price to fall. I think it will cause it to rise because the demand will continue to rise. But of course, there is a sort of another factor. Although we had massive selling of silver in the last 3 years, year after year, people were selling their private silver to supply the difference. I suppose in a recession that might increase because people will be losing their jobs and they may have no choice. I mean, that's where a lot of the silver comes from. the money is not and has not been going into silver or gold for the time being, and we can tell that by looking at the ETFs and seeing that nothing's entering. So the buyers of gold for sure have been some big institutions, perhaps central banks, perhaps the Federal Reserve, perhaps Warren Buffett. We don't know, but there's obviously somebody taking delivery of 100 ounce bars, which are big bars of gold. The same thing, 5,000 ounce bars of silver. So these are big buyers who are pushing up the prices, not the man in the street. What do I think is going to happen? Well, I think when NASDAQ is down and people perceive it's down, and it's on its way down already as I see it, but I think a lot of people haven't noticed that yet. I think they're going to turn around and look for something else to buy. And, silver could well be the place they turn. They're gonna, people have been buying these volatile stocks will look for something else which is volatile. And silver, we all know, is more volatile than gold. So I think there's a pretty good chance that might be the thing they dive into. But I think the supply and demand looks after itself in the long run. In the short run, we might have this real rush of people, and that would make a very big difference. Yeah, well, there's a number of pure silver miners. Fresnillo, which is quoted in the UK, is one of them. I think it's the biggest in the world. But for the most part, silver is coming out of the ground as a byproduct of mining something else. So the cost of mining the silver isn't particularly relevant because we're talking about the cost of mining copper and silver, and most of the output is going to be the copper. It's much more influenced by the price of copper. So if the price of copper goes up, I suppose more silver will come out of the ground over time. And if the price of copper goes down, I suppose there'll be less silver coming out of the ground. It's not really the price of silver which determines what comes out of the ground. But what the price of silver does determine is how much of the above ground stock of silver gets sold or recycled. Because every time the price goes up, people say, I'm not buying any more coins because they're too expensive this week. And the grannies all say, let's take my silver candlesticks or my knives and forks down to the pawn shop and see what I can get for them.
U.S. consumer prices likely rose in February, highlighting the Federal Reserve's slow progress in controlling inflation. While inflation remains elevated, Fed officials may stay on the sidelines, assessing the broader economic impact of shifting policies under the Trump administration. According to projections from economists surveyed by Bloomberg, the core consumer price index, which excludes food and energy, increased by 0.3% in February. While this is slightly lower than January's 0.4% gain, the annual inflation rate remains stubbornly high, underscoring persistent pricing pressures. In an interview with Fox News Sunday Morning Futures, President Donald Trump described the current economic climate as a period of transition, dismissing concerns over a potential slowdown. However, his administration's focus on trade policies and federal job cuts has contributed to market uncertainty. Senior Analyst Clive Thompson notes that achieving the Fed's 2% inflation target appears increasingly unlikely, given ongoing price pressures and rising unemployment. The combination of inflation and job losses signals a troubling economic shift. As government layoffs rise and spending slows, concerns over a potential recession continue to grow. Let's get back to the interview.
Just on treasuries, don't forget we have a debt ceiling in place. So the US government is not supplying the market with any new treasuries. So at the moment, there's no supply, and that's why treasury prices have moved a little bit higher. But what happens when they raise the debt ceiling again, as they surely will? They've got until August before they absolutely go bankrupt. So they raise the debt ceiling at some point. They'll issue a massive amount of treasuries at that point, and at the same time, they're imposing tariffs on all these foreign countries. And part of the idea of tariffs, whilst that's raising revenue for the Americans, it's damaging the foreign economies. So what's the reason why the foreign economies would want to hold so many treasuries if they got less dollars coming in the door? First of all, inflation is not going to get to 2%. I think that's not going to happen. We're seeing rising inflation now, but we're also seeing rising unemployment, and they're firing a lot of people from the government. I don't think the people they're firing to a large extent are probably the people they hired in the run-up to the election. Don't forget there were huge numbers of people hired by the US government in the run-up to election to make the jobs numbers look good. So obviously, with these people being fired, I think a lot of them will get paid until September. So those numbers are going to start increasing the number of unemployed, assuming some of them don't find other jobs. The spending will in the United States will be decreasing due to the increased unemployment. So yeah, I think we're most likely to get an official recession soon. At the moment, it's not official, but it looks to me like it's been in recession for a few months, and I think all the signs I see with slowing numbers, slowing economy, slowing production, it looks like we're heading that way. That's my opinion. These numbers are consistently unreliable and constantly revised upwards, downwards, sideways, depending on what they want to prove.
Yeah.
I haven't looked at the figures this month, but I know that for the majority of last year's, almost every month, they revised the non-farm payrolls of the previous month downwards to make the current month's increase or number look like a big increase when it wasn't.
With silver demand surpassing supply and economic uncertainty influencing investor sentiment, the metal's role as an industrial and financial asset is becoming more pronounced. Persistent supply deficits, rising inflation, and market volatility may drive more investors towards silver as a hedge against economic instability. Silver's unique position could make it a key asset in the years ahead as financial markets navigate shifting policies and global trade tensions. Could silver's widening supply gap and increasing industrial reliance propel it to new price highs, or will economic slowdowns limit its upward momentum? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.